Hey crypto friends, for those of you who are new to the channel, my name is Garrett and welcome to Altcoin Radar. Today's educational video is going to be all about bull flags and bear flags in trading any financial market, whether it's the crypto market, stock market, or really any other financial market. And guys, for those of you who are new to the channel, if you are interested in trading crypto and you would like to try out the same exchange that I use, feel free to go ahead and try out the MEXC crypto exchange. You can find a link to it in the description below this video. I've been using this exchange for about 3 years now, and it is awesome. I absolutely love it. Best part about it is with all the stuff going on right now in the crypto space, MEXC is one of the only crypto exchanges around that does not follow all of the BS drama that all the other exchanges follow. So that's kind of one of the big things that I love about the MEXC crypto exchange. It's awesome. They also have futures trading. They have over 1,500 altcoins to trade at any given time. So that's another reason as well, since I'm a huge altcoin trader. So guys, whether you are trading the stock market, realistically here, whether you're trading the stock market, the crypto market, or any other financial market, when it comes to bull and bear flags and technical analysis, flags are basically just a continuation pattern that allows traders and investors to perform technical analysis of a financial asset to make lucrative trading decisions. All right. So in this video, I'm actually going to dive deep into bull and bear flags so that you'll know what to look for when you actually spot them and how to trade with them as well. So guys, as far as what a bull flag pattern actually is, let's go ahead and check this out. Let me go to Ethereum here because that's where I spotted this one. Come on, where are we? There we go. All right. So a bull flag pattern is typically a sharp, strong volume rally of an asset that portrays pretty much a positive development, okay? It typically forms when the price retraces simply by going sideways, to, a lower price action on weaker volume, as you can see here, typically, and it's typically followed by a sharp rally to new highs, which is where you can see it right here, all right? And traders around the globe, they love bull flags simply because, these bull flags, they're almost always predictable and true, literally 99% of the time. I mean, literally pretty much every single bull flag that you come across, it typically always turns out to more upside after its continuation. So that's awesome. So when we're actually looking at it on the chart here, a bull flag pattern is typically characterized by an initial sharp rally, which you can see right here, and there's kind of a bigger initial sharp rally right here as well. But either way, regardless, there's an initial sharp rally right here, as you guys can clearly see, and as you can see on the RSI down here too, it pretty much started when we were in way oversold territory as well. So it was due to make a flip and start going upwards anyway. So as you guys can see, there's that sharp rally we're talking about. But anyway, it's usually characterized by an initial sharp rally and then by a period of consolidation, which is what you see right here in the two sloping lines going downwards, all right, which is the actual part, the formation actually of the actual flag formation itself. All right, this is why this little setup right here is called the bull flag. All right, this is the flag portion of it. All right, this would be technically the flag pole. This would be the actual flag part of it. All right, and then this would be another pole as well, typically. But anyway, to move on here, the volume typically increases when the pole is being formed, which is right in here. All right, so when the pole is being formed, that's typically when a lot of volume is there. Then it typically drops during the period of consolidation, and though the following breakout, which is right here, though this following breakout does not always feature a high surge in volume, an increase in volume can show that there has been typically an influx of new buyers here, pretty much, which is typically why we see these bull flags almost always pan out 99% of the time. So again, you guys, this is a clear, good, solid example of exactly what a a bull flag looks like. We've got our flagpole, our consolidation right here, and we've got our continuation up here. All right, it's very simple, very straightforward. You can spot these pretty much everywhere. All right, well, not everywhere, but you know what I mean. So yeah, we'll go ahead and delete these real quick, and we are going to move on now to the bear flags, all right? Because, you know, Bitcoin right now at the time of me filming this video is in a giant bear market. So there are bear flags everywhere, all right? Oh boy, this looks ugly. All right, let's go ahead and make this smaller here, and we will move on to here. All right, there's my bear flag. All right. So let's check this out, you guys, all right? So a bear flag is typically a sharp volume decline on a negative development, which you can clearly see here displayed in the chart that I'm showing you right now, which typically takes shape when the price of the asset rediscovers itself by simply going sideways to a higher price action on weaker volume, followed by a sharp decline to new lows on strong volume, which is what you see down here. Realistically here, a bear flag pattern is pretty much characterized by an initial sharp decline, and then, you know, which is right here, the initial sharp decline, and then a period of consolidation, which is what we got right here. And then with most bear flag patterns, the volume increases when the flagpole is actually being formed, then remains at its, you know, new level. So realistically here, you know, in comparison to the bear flag or the bull flag that we were just talking about earlier, you know, there's a lot of key similarities here between the two. It's literally pretty much the same thing, just reversed in the opposite way. So anyway, in addition here, you guys, volume typically does not decline during the consolidation period, as downward trends are often vicious, cycle driven. By investor fear over, you know, falling prices. And that's typically what happens here. And because of this, the volume is always, you know, the volume is upwards, you know, as the remaining investors, you know, pretty much feel compelled to take action here. Now, before I actually go ahead and wrap up this video, because this video wasn't meant to be long or anything like that, just a simple, basic, you know, I like to try to make things as quick as possible and easy to understand as possible. And that's why I give you examples like this on screen so you can see and come back for future use and, you know, try to find some on your own and whatnot. But before I actually wrap this up, I should also note, and I would like to also note, that while a bull flag validates that, you know, the preceding uptrend will continue, you know, when we're talking about bull flags here, not bear flags like what we're looking at here, you know, while a bull flag validates that the preceding uptrend will continue, you know, the bear flag ensures that the preceding downtrend is likely to occur, okay? And it should also be remembered that bull flags are typically sharp rallies that are, you know, pretty much followed by a period of consolidation that forecasts the breakout of an asset. And, you know, bear flags are pretty much sharp downturns followed by a, you know, period of consolidation that forecasts the reversal of an asset. So as you guys can clearly see here, I mean, like I said earlier, we are in a giant we are in a giant bear market with Bitcoin at the time of me filming this video. But I mean, this bear flag here, I mean, it cannot be more clearer. I mean, this is a textbook bear flag we've got going on right here. Here's the pull. We've got our consolidation right here, and we've got our next pull going downwards here. Textbook, honestly. Now, if we go ahead and zoom out here, let me just show you this bigger one here that we've got kind of going on as well. So that's kind of, let me see here. So that flag was literally within this segment right here, you know, going down and then up and then down, all right? So if we take a look, if we take a look at this bigger trend that we've got going on here, typically we could technically say that this entire thing is kind of a, you know, this entire thing was kind of a bear flag as well, all right? If we were to take ahead and go like this and go upwards like this, and then we make another one with this one right here and go straight up like this, we can pretty much typically say that this is kind of a, you know, typically a bear flag as well. We've got pretty much the same setup. I mean, we went straight down. We've got that very strong straight down movement. And then it's not another straight down movement going downwards, but clearly, as you can tell, it did ultimately end up going downwards. So technically, this would you know, we can consider this most recent price action in Bitcoin to be typically a bear flag as well. So, but overall here, guys, I feel like I've pretty much explained this very well. So if you guys have any questions or concerns about this or anything like that, feel free to reach out to me on Twitter or leave me a comment in the comment section down below this video. Other than that, you guys, that's going to pretty much do it for this video. So I will go ahead and wrap this one up But again, guys, hey, before you guys leave, go ahead and make sure to subscribe to the channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey, guys, with that said, thanks again for watching, and I hope to see you guys in the comment section down below of my future videos.